And good morning, Janet Atkinson here with you as we dive on into the livestock and the grain markets. But we start things off with the grain markets, but there's a lot of red showing up throughout both sides of Chicago today. Let's go ahead and take a look at the grain trade. And as we said, corn futures starting off lower. Of course, that's following some different changes of weather over the weekend, and in fact, a little bit of cooling down. Now, we are joined over the phone by Brian Splitt. He is with Allendale out of McHenry, Illinois. And Brian, as we were talking off camera here just a moment ago, you're in an area of Illinois that's been receiving a fair share of moisture this last couple of days.
Yeah, we're definitely in an area where when systems come through, we seem to be getting very consistent showers, and when we get it, it's awful high totals. The Fox River out here is cresting right now and is at record levels, so it's a pretty rough situation for anybody who lives along the river, that's for sure.
Well, Illinois, of course, a significant corn and soybean state. What kind of impact? I mean, were you guys in need of some rain?
You know, to be honest with you, the areas that we are seeing rain, there's some agricultural production here, but it's also very close to the suburban sprawl from the city of Chicago. So while very far northeast portion of Illinois is getting rain, you have a lot of the state that is not getting rain. So I don't know if these recent systems have improved the outlook for Illinois drastically.
Well, Brian, talk a bit about what is taking place in Chicago today as far as the board is concerned. As we were talking, downside action, double-digit losses in soybeans so far.
Yeah, you know, and both corn and soybeans gapped lower last night, so that means that the opening price to start the week when we opened up the electronic trade last night was below the low that we had traded on Friday afternoon. So that definitely shows a little bit of a shift in the perception to where this market may head short term, but we've got crop conditions coming out this afternoon, and I think the market's a little reluctant to press it further because we are expecting conditions to decline, and we did have quite a bit of heat in some key growing areas last week.
And what about the wheat markets as well?
Well, the wheat market, a lot of the rally that we've seen on the soft red and the hard red wheat was really some tag along with the spring wheat. And the spring wheat contract right now is about $1.50 off of the highs that we saw earlier in the month. So it seems that right now, the way the spring wheat market goes, so too shall the other wheat, and we've seen some rains recently, so that's taken off some of the short-term concern about the Minneapolis contract, but I think there's still a lot to be discovered out there as far as where this yield really lies.
And before we wrap things up and take a look at actual numbers on the board, also talk about the grain export inspections. Of course, those were just released here this morning. Significant changes as far as comparison to what we saw this time last year. Corn up about 12 million metric tons for this time period.
The inspections that I have here, it looks like corn year over year was down slightly for the week. Soybeans were actually up quite a bit week over week we were up, but year over year we were down a little bit. But what I'm looking at for soybean exports, the old crop continues to move, and right now the market's going to be focused on making this crop. That's going to be the main focus. The inspections right now, it's going to be something we have to pay attention to for small adjustments on the balance sheets for old crop, but I think the main focus right now is definitely on weather and how the crop that we're growing right now is going to yield.
All right. Well, Brian, thank you very much for the rundown. If you'll hang around, we'll talk about livestock here in just a moment. Stay with us. We're going to do a rundown of the grain trade as well as the livestock markets right here on your Market Day Report. Well, like what we've been seeing on the grain side of business today, the livestock side of the business also seeing its fair share of downside movement to start off this week. However, not really a lot of surprise as far as the cattle markets are concerned following that cattle on feed report that came out after the closing bell on Friday. Now, we are once again joined by Brian Splitt. He is with Allendale out of McHenry, Illinois. And Brian, as I mentioned, it came out after the closing bell, so it seems like a lot of the traders were sort of sitting back and waiting, but boy, have they let loose here on Monday.
Yeah, and you know, the cattle on feed report showed placements just way more than the trade was looking for. It came out at 116%, and the average guess was around 106%, so that's a 10% difference. The cattle futures gapped lower, similar to the grain futures, but with quite a bit more distance between Friday's lows and where today's opening prices are, and we're actually trading down the limit right now in the October and the December, with most other months very close to limit as we speak.
I'm going to guess that that's no surprise to you, given what that report stated.
No, I think this was actually the largest placement number for this particular month since it was 1993. So this is way more than expected, and it seems like the market really did not anticipate that. We've been trading in a sideways range recently in this August, which is still the front month contract for the short term. And we're just really revisiting the low end of that range. But I tell you, if this August contract breaches 112, we could be in store for a rather aggressive move to the downside over the next several weeks.
Well, significant losses also taking place in the feeder cattle complex. But let's go ahead and turn our attention over to the lean hogs. Downside action there as well today.
Yeah, and I think you're probably seeing a little bit of some spillover selling from the cattle. If you can't sell the cattle futures, some traders will move over into the hog pits and start selling there. But looks like we're also seeing a little bit of spreading where the nearby is maintaining some strength compared to some of these deferred contracts. Main weakness being seen in the December and February time frame, down about $1.30 there, while August only down 50 points. And this August is still trading quite a bit under the index, so it'll be interesting to see how they rectify that, with the index most likely needing to come down quite a bit, but maybe this August will go up a little bit to meet it as well.
All right. Well, Brian, thank you very much for your insight today. Again, talking with Brian Splitt. He is with Allendale, based out of McHenry, Illinois. With that, let's do a quick run through on the mercantile and the livestock complex, starting off with the live cattle trade. As we've seen, some triple-digit losses taking place today. Starting off with the nearby contract, August down $2.94. That's a $113.48. October down $3. That's a $114.40. December also $3 lower at $115.18. Over into the feeder cattle complex, significant losses there as well too. Limit down movement. September down $4.50 at $148.65. November down $4.40 at $146.02. Into the lean hog pit, as Brian said, maybe some spillover action taking place there. October down 90 cents at $66.32. December down $1.30 at $60.68. And a quick run through on the corn side of business, going back to what was taking place in the grain complex. We've been seeing downside movement on the grain as well. December new crop down 5 3/4 at 387 3/4 cents. Soybeans currently September down 17 3/4 at 996 1/2. November down 18 1/2. And in Chicago, December wheat down 12 1/2 at 510. In Kansas City, December down 13 3/4 at 509. And in Minneapolis, that December contract down 31 1/2 pennies, currently sitting at $7.42. So a lot of downside movement to try and keep track of today.
Okay, thank you, Janet.
Thanks, Christina.